Welcome to How to File Taxes, an overview, tutorial part 1 of 2. Today we're going to go over the income, adjustments, deductions, exemptions. Now taxes may seem like a very complicated subject, and the government has an uncanny way of complicating very simple things. However, taxes are in reality very simple concepts, albeit very dry and very detailed. So we're going to start off with income. Now income is how much you make from all sources. For example, it could be from your job, various investments, rental properties, pension, and unemployment. Now these are just examples of income. There's a comprehensive list of things that could be considered income, but for the sake of this tutorial, I just wanted to give you some examples. So let's say last year your total income from all sources was $32,000. Now, we reduce your income by adjustments. So adjustments can be tuition paid at a college, moving expenses, student loan interest, and alimony paid. Once again, these are just examples of adjustments. There's a whole list of things that you can adjust, but I just wanted to give you an idea of what adjustments are. So, previous slides, we determined our total income was $32,000. From there, we can subtract adjustments. We have student loan interests of $2,000, and we moved last year, so we have $500 in moving expenses. So from our income, we subtract the adjustments, and we get the adjusted gross income. And in this example, our adjusted gross income comes out to $29,500. So we have $29,500 in adjusted gross income. From there, we subtract either the itemized deduction or the standard deduction. Now the standard deduction depends on our filing status. So if we're filing as a single person or a married filing separately, we can deduct $5,800. And if we're filing as a married filing jointly or a qualified widower, we can deduct $11,600. And finally, if we're filing as a head of household, we can deduct $8,500. Now these amounts change every year, so this is only true for 2011. For 2012, these amounts that you can deduct as a standard deduction may change. Now we can either take the standard deduction or an itemized deduction. Itemized deductions can be things such as mortgage interest, charitable donations, medical and dental expenses. Now these are just examples. There's a whole list of things that you can itemize, but I just wanted to give you an idea. Now generally speaking though, if you don't own a home, you probably want to take the standard deduction because mortgage interest will be by far and large the largest itemized deduction that you can take. So the million-dollar question, what do you take, the standard deduction or the itemized deduction? And the answer is very simple. You take the amount that will give you the largest deduction. So $29,000 and $29,500 in adjusted gross income. We subtract either the itemized or the standard deduction, and from there we subtract the exemption in order to get the taxable income. So in our example, we have $29,500 in adjusted gross income. Now we don't own a home and we're married filing jointly. So in our case, the largest deduction will be the standard deduction, and if we're married filing jointly, we can get a standard deduction of $11,600, which subtracted from the adjusted gross income will come out to $17,900. So from $17,900, we then further subtract the exemption in order to get the taxable income. So what are exemptions? Exemptions are amounts that further reduce the amount of income that is taxed. So you can claim an exemption for yourself, your spouse, and each dependent. In 2011, you can take an exemption of $3,700. So let's say I have a wife and 2 kids that I can claim as dependents. That comes out to a total of 4 exemptions. One for myself, for my wife, and for my 2 kids. So 4 exemptions, multiply that by 3,700, which is what I can take for 1 exemption, and our total exemption comes out to $14,800. So we determine our total income. We determine we can subtract from our total income adjustments, deductions, and exemptions, which we figured in our last slide comes out to $14,800. And we come out with our taxable income. Coming up, now that we determined our taxable income, we're going to figure out how much tax we owe based on our taxable income. So please stay tuned for how to file taxes, an overview, part 2 of 2.